Good morning, YouTubers, subscribers, traders from all corners of the globe. Happy Monday morning. Today, quite a relaxed day for myself. I've woke up, no alarm clock, not having to do anything for anybody. So I got straight on the charts and I've spotted something quite interesting. And I've spotted this on gold. I have been meaning to do a video on gold for some time now, but I was waiting for more or less some confirmation for my internal viewpoints. And I believe I've now got that, especially after last week's non-farm payroll. So I'm just chilling at home today. And what I'm going to do is I'm going to do a small market breakdown. Now, this breakdown is going to be relatively useful to anybody who's holding gold, and not just gold, silver also. I've said many times myself, yes, gold is going much higher. Economy's going to crash, dollar's going to crash, etc. However, in this market, one thing that's very important is never get attached to a certain viewpoint bias, okay? Because things can change, anything can change. And I'm going to break down these charts and I'm going to give you guys an insight as to why I believe and why I think that gold, as long as we stay below 1370s to 1400s, we're going to come a lot lower. Why is this important? This is important because it's actually reflecting the new important emerging market in world markets overall, which could be cryptocurrencies. I've done one video on that. I'm going to do the next video soon. But gold at the moment is looking quite shaky. Gold can come a lot lower. So if you're holding gold, holding silver, there's many articles out there. There's many analysts saying yes, gold, silver is going to boom, etc. However, you have to be wary that when many people are talking about the same thing, especially in mainstream news, you want to run. You need to get out of there because you do not follow what the majority is doing. Now, people are flocking to buy gold, flocking to buy silver. There's a shortage of silver at the moment from my understanding of my market research. However, as I say, we could be coming 40% lower on both of those markets as well. So over the next few years, yeah, wait for the price to come down because the higher interest is coming from the people with the money, the banks, huge investors, etc. They're not going to want to start stocking up on gold at this medium price. They want it to come a lot lower, stock up before going higher, and this cycle could go on for the next 3 or 4 years. Also, interesting times right in front of me now. You can't see my screen, but I have Dow Jones. Dow Jones may be making a top between 1840s all the way up to like 1940s in the next it could be very soon, in the next 3 to 6 months, but just to let you guys know, I know this thing is going to fall out the sky anywhere around where it is now and maybe lose 40% of its value. We've got the Euro stocks as well, which are looking to decline maybe 50%. Shanghai Composite, we've got all of these world markets on the brink of potential collapse. I don't think gold is going to reflect higher prices as of yet. So interesting times, we've got some interesting technicals which I'm going to go over now. It's just a short video, and I'm also going to go into the Euro USD and GBP USD just to give you a little bit of Forex, a Forex breakdown, and just to give you my thoughts on those two currency pairs and a potential target zone to the downside. So I'm going to just run through this video. I hope you enjoy it. It's just a quick one, as I say, Monday morning. Then I'm going to head off out and enjoy the sunshine. So yeah, hope you enjoy. Thank you. XAUUSD is the symbol for spot gold on TradingView. That's what I'm using right here in front of me, in case anybody wants to go in and have a little bit of a play around on their own. So first I'm going to start with a monthly time frame. Now, gold on the monthly time frame has shown some slight rejections around this zone here. Now, I've got my key level set on, and I was actually waiting for a full bullish bodied candle at the end of last month to actually maybe close above the monthly resistance. However, we didn't get that. This month already, we're only 7 or 8 days into the month of August right now, and we can see that we are pulling back ever so, I wouldn't say in too much of a violent manner, but we are pulling back at a substantial pace for being so close to the start of August. Now, The lows here at 1080s, around 1080s, well, anywhere between, well, we've got 1040s and 1080s. You can go back on my trading view, by the way, where over a year ago now, I think gold was trading around here somewhere, around 1320s, 1300s. I did actually predict that it will come all the way down to 1080s. It surpassed that by about around 300, 400 pips. And then we have had a substantial rebound. Now, many people out there, as I've already mentioned, are reading all of the articles online, and I have been prone to it myself, saying, yeah, gold's going to fly up, silver's going to fly up, there's going to be huge market crashes, the Dow Jones is going to fall, FTSE is going to fall, everything's going to fall, let's all buy gold and silver. Now, the reason why that isn't too much of a great idea is because gold and silver has always been a currency, do not get me wrong. However, in this age of technological advancement, we have new currencies emerging, like cryptocurrencies, for instance. Currencies where we can now keep more or less our own bank in our own pocket, and we can pay for things with these cryptocurrencies, whichever crypto. I'm not going to go into that right now, but we can pay other people with cryptocurrencies by sending tokens to each other now via apps. Okay, whether you're on iPhone or whether you're on Android, there's apps available where we can now transfer our paper fiat money into cryptocurrency and now pay each other like that. Now, since I've been going deeper into the cryptocurrency, the evolution of cryptocurrency, I've kind of stepped away from the gold and silver. Now, gold and silver is great to have, don't get me wrong, as it's always going to hold its value. But it is not really transactional friendly. And now what I mean by that is you can't go and walk around with an ounce of gold, half an ounce of gold, and start to try and transact for some food. That isn't going to happen right now, okay? We have more chance of shops, to get your groceries, whatever it is you want to buy, accepting cryptocurrencies right now. So by all means, gold and silver will hold its value, and I do believe it's going to increase in value in the future, however, not just yet. So at the moment, we see this area on gold that is a substantial area for the precious metal. Whereas if we do not break above this zone very soon, I do believe that we're going to be heading a lot lower. Now, it's not just that. We have other demographical factors in which are in play, and gold likes to cycle, like all markets like to cycle. And the next cycle on gold to the downside is very soon, maybe even into 2017, end of 2016. I've been waiting for gold to maybe come down. I was looking at around 1,900, 950, but now I do believe myself that we are going to see gold drop, and we're going to see gold drop all the way down to around 750, 700 level before actually going higher. Now this cycle, this next bearish cycle on gold could in fact take, 2 years, up until 2018, halfway through 2018, before we actually make a base around the 700 800 level before actually going higher. I reckon we will see gold come all the way back up, maybe to retest the all-time highs around 1900s, maybe in 2019, 2020. So we have all of these problems in the economy. We have the inflation, we have central banks looking as if they're going to start going into negative interest rates now, which is completely unheard of, 5 or 7 years ago. But there's all of these things emerging now, which has changed my perspective on gold. I'm not going to go into each individual piece over here, but it's one of those ones where you're going to have to just put your research in. And I know a lot of people are flooding to buy gold, especially silver as well. Silver's a lot cheaper, and I've read so many articles online. I don't believe everything I read online. I just try to take what I need and discard the rest, and try to put pieces together which resonate with me and my own personal understanding of the economy and my understanding of gold and silver. But yeah, we're looking like people are flocking to, especially silver, and places are running out of silver now. Now, when something is mainstream, like gold and silver is going to rise, that's when you want to be kind of a little bit wary. When I was first saying this, maybe around a year ago, there wasn't too much mainstream. There wasn't too much people in the mainstream talking about gold and silver, and there's been so many this year, and a lot of it, to be honest, in the markets are more or less like a bandwagon. A lot of people like to jump on and say, yeah, you know, gold and silver is going to rise due to this, that, and the other because of inflation. Well, we've already been experiencing inflation for the last 7 or 8 years or so. Since 2008 alone, the currencies, the fiat paper money that is now in circulation has quadrupled. The monetary system and the debt has also quadrupled. And as you can see, since 2012 here, look at the reflection of the price of gold. You've got all of this paper money being pushed out into the economy. Banks are going broke. You know, a lot of people are in debt right now. But the price of gold has actually fallen. Now, gold is a heavily manipulated market, just like the currencies and other markets out there. It's run by a select few banks, more or less, who are playing with the price, who are just destroying the retail traders over and over and over again. I've mentioned this in another video, manipulation video, probably about a year ago. I put that on YouTube. But yeah, we just have to be careful with what's out there and kind of do what the majority isn't doing. Okay, let me rephrase that. When the majority is doing something or speaking about something, go the opposite way. So gold at the moment, I've just studied, you know, the technical levels are very important again on gold as they are on currencies. So let me just drop it down to a weekly time frame. Now, weekly, after last week's non-farm payroll, and for anybody with market understanding, they know that the news is more or less a mask for manipulation. They'll put the news out there, macroeconomics or whatnot. It's very, very well timed to the key levels in the market. Okay, and then they can use these factors, the economical factors and things such as non-farm payroll, to actually reverse price and, you know, give it that boost as to where they want the market to go. And then they can just say, oh, okay, you know, the figures were better than expected or lower than expected, that's why it's falling. But there's a deeper significance behind all of these charts. So gold at the moment, we're seeing a little bit of a reversal right off the monthly resistance. Now, I am looking at gold to decline over the next few weeks, and I reckon we're going to see 1300s again, if not 1285. If I just drop it down to the daily time frame. Now, daily on gold, I wasn't really expecting this kind of double top formation. I don't really like to call it that, but because there's other things at work here, I'll drop down in a minute to a smaller time frame. But that was the result of Friday's daily close after non-farm payroll. Now here, this is where I spotted a reversal not too long ago. I must have posted it on Instagram or somewhere. But as you can see, 1, 2, 3, 4 daily attempts trying to pierce beyond 1370. So 1368, 1370, this whole region where I have the highlighted box zone is quite an important zone for gold, and it's one in which if we do not break that and close above it on a weekly time frame, gold is going to go a lot lower. Now, what we've seen, I was short after, on a smaller time frame, after I spotted this reversal. I put 2 and 2 together. Gold has had 4 attempts on a daily basis to breach this level. It didn't breach it. It fell down around 400, 500 pips, and I caught 300 pips. I was short gold, you can see on the screen. I was short gold and I was short Aussie at the same time. I made some great profits in that particular trading week, and then I closed it off. Why did I close it off? Because I seen the reversal around here, which is one of the third points on my trend line. A lot of people like to slate trend lines and so on, but I use them as on the higher time frames for an overall perspective and bias, and they do work, because if they didn't work and I didn't spot the same patterns over and over again, I wouldn't use them. But at the moment, so we've had 1, 2, 3, we've rebounded back up to these highs. 1, 2, 3 on our 4th day. Once again, we've dropped a lot lower. We've engulfed a shitload of price action right here, and we're looking as if we are breaking this trend line now. The significance of the trend line break is something that I don't take as gospel, but it gives me an idea as to where the market's potentially going to run to next. As you can see here on the 4 hour, we have a nice reversal around here, a nice reversal around here. We have 1, 2, 3, 4, 5, 6 days of indecision accumulation, where the banks and so on are accumulating positions. They've dropped it down, spiked it back up here. Again, we have sideways action, consolidation, accumulation, and then they've basically waited for the non-farm payroll release, and they've dumped the price. So all of this here is a substantial, significant price action to tell us that gold is now on its way down. There's a lot more things in my head. Again, I've studied gold and I've watched gold for years and years and years. A lot of it is experience overall. I'm just giving you guys a heads up on something to maybe consider. So anyway, yeah, I'm not going to go lower than the 4 hours. No real point in that for this video. But if we break the 1285 level, just get rid of this for a moment. If we break 1285s, now in terms of trades and positions, I'm not going to go out there and start giving you targets, stop losses, etc. One thing to be mindful of though is obviously the upper area of the 1370 level where we haven't yet breached. As long as we do not breach that, I reckon we can come to, as I say, 1300, 1285s, a break of 1285 back to 1200. That's 1,300 pips to current market price. A great thing to do as well would be to monitor the weekly time frames here on gold. And a lot of maybe position traders, I don't know the full ins and outs of it, may have stops below these lows here. Maybe 1030s, 1020s, because they believe that's a safe place to hold their stop losses. They could be in substantial profit now, waiting for gold to actually go higher, waiting for it to go out and take the all-time highs like all of the articles say. That's cool, but the market, if the market knows that, okay, there's a shitload of money down there ready to go and be collected by me, gold, get on the gold train and we're going to go south. We're going to go and take these lows out and we're going to go a lot lower. Confusion may set in. As you can see, this price action hasn't been the easiest to read overall, but what we can say is that if we do continue to the downside and we have to monitor each weekly candlestick, each daily candlestick, we can take out this zone and we can come a lot lower. In terms of how low we can actually go on this one, I normally use Fibonacci, the Fibonacci retracement and extension for a lot of my trade decisions, especially my targets. If I went from the highs down to the lows here, I'm not a fan of fib on gold. Okay, I'm just going to say that before I put these Fibonacci targets, confidences out there. I'm not a fan on it whatsoever. If we do get a close at the end of the month, maybe down here somewhere, I would consider that as a 1, 2, 3. I would consider that as a reversal at the 38.2. As I say, I'm not a fan of it on gold, but if you wanted to use it on gold, our downside targets are 840 and then 583. I have a lot of confluence around the 870 level and the 800 level and maybe 750. So guys, you know, I reckon gold can come anywhere down here, which could give us brilliant sell opportunities intraday, intra-week, intra-month. We could hold it, swing it, depends on, it's completely up to you. I'm just here giving you a little bit of a breakdown as to what I think is going to happen on gold for the next, as I say, it could even take 18 months, it could take 15 months, it could take more. Now, what would this mean as well is the value of the US dollar could in fact significantly increase. I ran over that on my last Brexit video if you want to go ahead and check that one out. But with that being said, everyone thinks the dollar's going to crash, which, yeah, you know, it could do. I'm not going to put anything in stone here, but all of the currencies are fucked. All of these fiat currencies are fucked. We've printed so much money in the last 7 years alone. There's so much debt out there and there's so much leveraged false numbers on screens that, to be honest, it's not just the US dollar which is in a potential, you know, ready for a phase of decline right now. But as I say, gold, just going off demographics and so on, because the spending in the economy is going to go down a lot as well due to university fees and all of the 20-year-olds, 25-year-olds, maybe out of jobs, not really spending too much into the economy. The university fees and loans that people take out these days, that's all more or less credit, so that credit's just going back into the system. So there's no real genuine spending going on at the moment, which isn't too valuable for any of the economies whatsoever. So we have a whole load of crap going on in the economy. We do not know what the next 3 or 4 years, you know, what lies ahead for the next 3 or 4 years. So all I'm going to say is that the inflation scare and all of the quantitative easing from the banks haven't really reflected higher prices in gold as you can see here, we've gone from like 1800s all the way down to 1050s, 1100s, and there's a lot more of it going on. So this could be the next leg for gold, okay? Because again, I've spotted this today. We couldn't breach 1370. The next leg for gold could in fact be one to the downside. 800s, 850s, 750s, anywhere around there. It's one of those ones where, okay, let's go and study. Let's see what's ahead for us on gold and silver. Don't buy into all of the mainstream stuff. Just be clued up on, yeah, gold is going to come through, but not just yet. So don't put your eggs all in one basket. So guys, that's just a quick technical breakdown on gold. I thought I would just share that with you, and yeah, I'll keep you up to date. Try not to buy too much gold as of yet. I reckon it's overvalued. The price is way overvalued, and there could be a potential in future to load up at a price that is going to be more interesting and to hold more interest and value to big investors, people with the money, the people who are putting these articles out there, you know, some of the banks, etc., etc. So just remember, don't get caught up in all of the nonsense. Take what you need and discard the rest, even from this video, and just be wary that the banks, the major players, like prices to come maybe a lot lower before investing in them. So there you go, guys, that's gold. I'm going to catch back up on gold soon. And yeah, have a great trading week ahead. Any currencies maybe to run over? We have the Euro USD over here. I'm just going to go over the Euro. One thing I was watching on the Euro, after doing some analysis over the weekend, was in fact this fib. I'm just going to throw this out there. A, B, well, let me just, boom, A, B. We have the reversal just under the 61.8 and the daily level of resistance there. Euro USD could come lower as well, and we're looking at 1.0820s for Euro USD, so it's about 300 pips there. One more, I just want to throw in GBP USD. So I'm going to use a NATS chart for this one. The GBP USD at the moment is struggling to hold highs. Now, what we can see here is lower swing high, lower swing high. This last week confirmed a new lower swing high. This one, after a lower swing high, we're looking at the last lower low being taken out. So I'm bearish on GBP USD. I'm looking for GBP USD to come and test 1.2780, 1.2750. So again, with this one, this has been all over the place. We had a little bit of accumulation around here. I was being very, very wary around this level. We had some fundamental announcement coming from the Bank of England last week, which pushed the price lower. We had non-farm payroll pushing it lower. We're ready for the next leg lower, basically. So I reckon we've got 250, 220 pips to the downside on GBP USD as well. So pound short, euro short, gold short. That's all I've got to say for the week ahead. Now, you know, I hope that's helpful. I'm going to go and get on with my day now. I'm going to go out for a little bit. And yeah, I'll catch back soon. Cheers, guys. See you later.